Well, good morning. I have, I believe, two people on right now, and whenever you want to ask a question, just turn on your microphone and ask it out loud, and we'll just take care of your question as I go forth on this lecture. But welcome, everyone, to the instructional session for Accounting 102. And first off, congratulations for successfully passing 101. This continues from where 101 left off. So I just want to give you, at the beginning, a quick tour of what this mega course structure is and remind everyone where all of their resources are. First off, I am the instructor person for this mod, and I'm going to click on live session, which two found so far, and there's a schedule here. Now, I am not the one that is on each and every one of these, as well as other classes are running in the same mod for Accounting 102. So we're giving you the ability to have a lot of support in these mega courses, where I'm actually giving the instructional session where you can come in, and this is a session that will be recorded for everyone else to hear. There are live sessions hosted by faculty members, your instructors, who are also teaching Accounting 102. So there's an ability to pop in at 8 o'clock tonight, 8 p.m. tomorrow night, 11 a.m. Wednesday, 6 p.m. on Wednesday, Friday at 9, and Saturday at 11 a.m. And those sessions will not be recorded, but they are places that you can pop in, have access to an instructor that's teaching the exact same course, and ask your question. And if there's someone else in the room with you, guess what? If you ask a question, they're probably very interested in that question too, because they have the same question. So don't be shy, but it's almost like a one-on-one session, essentially, possibly with another friend or two in the room with you, but sometimes by yourself. So take advantage of this cool resource. Now let's go back to the home page. And so that's the live sessions. Of course, and it's surprising me sometimes students don't know how to get to Shark, but this is Shark, and all I did was click on the second column. Come on, right here, where the Shark is. This is your help area. So let's click on there and see where your resources are. And you see the first row, the third column, Student Success Center with smile faces on it. Click onto the smile faces, and then you will see all the subjects that can be helped inside of the Student Success Center. And you click onto Accounting, you're going to see this the current schedule of when someone who is a student success person helping you, your tutor, when the accounting specialty is being supported. So today from 12 to 3, 5 p.m. to 9 p.m., there's support many, many hours of every day this week and every week. So you just click here to enter the Student Success Center, and then you'll be immediately put into the proper discussion window or discussion room. excellent source of support. Also, another excellent support is there's these little videos. They're short videos called Mega Course Lecture Videos. They're in the modules for your course home. And let's just click on that. And these videos, this is for week 1. There's an introduction to the flipped mega course, which is what I just described with one of the faculty, one of the instructors doing the instructional lecture, and then the time available for all the other ones teaching the same course in the same mod will be for helping students. So this is just another introduction to that. And then week 1 subject is closing entries. So if we click on week 1, closing entries, we will not play this entire video, don't worry. But when it starts, you will see that this video is 11 minutes. So it's a very short video. You can play them over and over. They're available 24/7. So take advantage of those videos also, in addition to your textbook. And here, week 2, this is the week 2's video, week 3, and week 4. They're already loaded up, ready for you to play. And you can certainly play them over and over and over as your particular needs are. This lecture will be shared to all the courses and probably posted to your announcement as a link. Excuse me. I'm going to just check the chat box to see if anyone's chatting with me. And so far, no one is. Can you all hear me? Walter and Sarah.
Yes, I can.
Excellent. Okay. So I'll minimize that and continue. Okay. So I talked about the live lectures. I showed you mega course. Also, I'd be remiss to say that, that you have a textbook, and the textbook is an excellent source. Also, we're going to go over a PowerPoint presentation today, and at the end, I'm going to actually go over the homework, what's expected out of that homework. And that's always an important thing to do. If you cannot stand to listen to my voice for an hour, as a recording, you can certainly speed through to the last maybe 15, 20, half an hour of the video itself, and actually find out where we're starting to talk about the homework assignment and what actually is expected, and kind of a couple hints on how to approach the homework. That's always at the end of my lectures. What else? Let's go to week 1. And I know some of this information is old hat to some, but for some others entering after taking a little vacation from college, it might be something new to them. So under Course Home, here's your textbook, and that's page down to week 1. So you have this is the subject for this week. We have a posting on introduce yourself, and then we have discussion. I'm going to shut the window here. There's a crying child outside. So go to discussions. Okay. This is worth 60 points. Now, some people, it's amazing, some people do not participate in the discussion, or they participate in the discussion like a week later. That's like going to a party after the party is over. So participation and getting points for discussion posts after the week is over, you get no points because the party is over. You don't go to a host's home for a house party Wednesday after the party was Saturday. So you have to have all the discussions in the week. Now, what I want to emphasize is to receive full credit, your post must be made, the first post, your initial answer to the question must be made by Wednesday midnight Mountain Time. I personally am sitting in San Diego, California, so that's California, so Mountain Time is not the time zone I'm in. So you have to be careful about what time zone you're in, and make sure you're in at least by midnight or 11:59 p.m. Mountain Time. And then you must post the remaining 2 responses to others' posts by Saturday by midnight Mountain Time. And we expect you to do at least keep the ongoing conversation at least on 2 different days of the week. So personally, I'm looking for a initial post by Wednesday and 2 posts responding to others' posts. And they can even be my posts. I'm going to be participating in there too as a discussion. I'm just going to keep the discussion going forward. But it's an easy way of maintaining some points. And a lot of times, if you don't participate in the discussions at all, that's 3 times 60 points. That's 180 points you would be throwing away. So don't throw away any points at any time during an accounting class. Also, we want to have your main post, your first post, has to be 2 to 3 substantial paragraphs, about 150 words total, and include at least 1 APA formatted reference citation. So it has to be a research-based. Of course, a peer-reviewed source that would be very easy to get to would be your textbook. And then please follow up with 2 subsequent replies to colleagues. That's what I'm calling your response posts. And each reply should consist of a relevant paragraph containing 50 words or more. Notice that this doesn't say you can only do 2 replies. We're looking for engagement into the course, engagement with your classmates. So doing the minimum is doing the minimum. So who says you can't respond to 2, 3, 4, 5 comments? Keep the conversation lively. Support the others and add more to the conversation and go forward. We don't consider a substantial response to be, good job, Bob. And then you go on to some other one and you go, good job, Susie. That's not, you posted something, but it wasn't a substantive paragraph because you didn't move the discussion forward. You just said, good job. Okay, also, do not forget that we have daily checkpoints. Let's go back. I'm getting there. Okay, week 1 again. Also, let's see, come here. You also have daily checkpoints. I believe they're probably right here. And these, like the daily checkpoint for week 1, Monday, it opened at midnight Mountain Time, about 10 hours ago, and it will close at 11:59 tonight. So these seem to be small points, 5 points, but when you consider that they're every day of the week and for all 4 weeks, they add up to a lot. That's 35 points a week. So if you kind of don't take them seriously, or you don't do them at all, which I've seen, you're throwing 35 points each week away, and that could be the difference between passing or not, or getting the A that you so well deserve or not. So they're one multiple choice question each. What else do we have here? Also, in the last week, you do have a final reflection, which has no points established to it, but it's just a way to reflect on how the course went. Was it impactful to you? Did you learn anything? And then you have the final assessment, which in this case is a multiple choice type of a quiz question. And for each one of these weeks, there's those same type of assessments. You just have the final assessment in week 4, but you have an assessment in week 1, 2, and 3. You can also practice for those assessments over and over and over again by going to the practice quiz for chapter 8 if you happen to be in week 3. And that will help prepare you to succeed in the assessment number 3. You can only open up the assessments one time, so you can't go in and take 2 questions and then go out, and then come back in, take 3 more questions, and then come out and do something else. You actually have to sit down and complete the whole process, and when you get done, you're out, and it's final. So there's only one chance to get into it, complete all your questions, and then exit, and that would be your score. Okay. So I think I'm ready to move forward. If I'll check with my my participants here. Are you all ready? Do you have any questions with what I've just said?
Not at this time. Thank you.
Not at the time. Okay. And I'm sure Sarah's there too somewhere. So why don't we get to the PowerPoint? And today is chapter 6. This course covers chapter 6, 7, 8, and 9. So it takes over where Accounting 101 ended with chapter 5. So this is all about closing entries. And you've seen this several times within Accounting 101. And it's the accounting cycle. And just to quickly summarize, you begin the accounting cycle by having a business event, and you evaluate whether or not that's a transaction. Like hiring a new employee is not a transaction, but when the employee works for you, for the company, and actually then needs to have a paycheck, then that's a transaction. So you have to analyze business events, and then when transactions happen, you have to analyze a transaction. And that was where we asked, did cash increase? Did we earn revenue? Is this a bill that we have because we bought office equipment? What type of accounts go with this particular transaction? And then we had to journalize, once we analyzed a transaction that said, well, we're going to increase cash and decrease accounts receivable. Well, then you had to journalize that data. And that's where we had to do the journal entries and take into account to increase cash, that would be a debit. So cash would be debited, and accounts receivable has a normal debit balance, but because our customer paid us, that debit balance would be reduced with a credit to accounts receivable. Yes, that makes sense. Cash goes up, accounts receivable goes down, and you actually went ahead and journalized those into the general journal. Then the next step, you posted those journal entries to the general ledger. So that was posting the data about the transactions. And then there were those posting references that in the general ledger account for cash, there was a posting reference box that you would put the page number of the journal that people can go back to see where it originated. Likewise, in the journal entry, we put the account number of the account that we posted that transaction to. So there would be like a cross-reference or an index, let's say. Then after we posted the transactions, we prepared a worksheet, then prepared financial statements, and then we journalized and posted the adjusting entries. Those entries that do not originate from having a piece of mail received. Like if you received some mail and there was a check from a customer, yes, that will be journalized now because you want the cash check and actually reduce the accounts receivable balance from that customer. Also, if you purchased equipment from, let's say, Office Max, Office Depot, and you receive the equipment, you receive the invoice, then that would have to be put in as accounts. So anything that's not a day-to-day transaction, anything that's not one would have to be journalized and posted here. A good example would be if you had office supplies, like $1,000 of office supplies in the office supplies room, and then you looked at the office supplies room and took a quick stock, and there's only like $200 of stuff left in the room. Well, you have to make an adjustment because $800 of the supplies obviously was used in the previous month as you did your business. So that would be $800 of supplies expense during that period of time. Then you have to journalize and post closing entries, and that's what we're focusing on now. Then you prepare a post-closing trial balance and then interpret financial information. So we're going to be dealing with step 7. It only happens at the end of the fiscal year. It only happens one time a year because after step 1 through 7 happens, I'm sorry, 1 through 6 happens, then you go back to 1. And you do that for the next month and the next month and the next month and the next month until your end of your fiscal year. Typically, that is December 31st. And then you have to do closing entries for the year, and this prepares the general ledger for the upcoming year. And we'll see how that works. I'll check the chat box. Okay, everyone seems to be cool so far. Okay, let's continue.
I think it's really hard.
I'm sorry, hold on, let me, I can hardly hear you. Let me,
Be quiet.
okay, what did you say, Sarah?
That was my daughter, sorry.
Oh, okay. Okay, not a problem. We have a brand new accounting student.
Yeah.
Yeah, the children are taking over accounting. That's cool.
Okay.
So the one account that we have to add in order to close the accounts out at the end of the year is an income summary account. It is the account that's only used one time a year, and it's used for 3 journal entries. That's it. So it's called the income summary account. and is classified as a temporary owner's equity account. Temporary because, as I said, there's only 3 journal entries that impacts it, and then it's back to a 0 balance, and it's not used again for another 12 months. It does not have a normal balance. Like assets always had a normal balance of a debit, and liabilities have a normal balance of a credit. This doesn't have a normal balance, and you'll see why in a minute. It has a 0 balance after the closing process, and it remains with that same 0 balance until after the closing procedure for the next period. So there are 4 steps in the closing process. One is to transfer the balance of the revenue balances to the summary account. You know, I think I have something I want to show you here. No? Well, I must have lost it. Maybe, maybe not. Yep, I lost it. Okay, then I won't show it to you. Simple as that, right? But I'll describe it for you. Remember in the worksheet, we had a trial balance, and the trial balance had the balances of the accounts for the assets, followed by liabilities, equity, drawing account, revenue, and expense accounts. What we're going to be doing with these closing entries is to zero out the balances of everything that is not an asset, liability, or equity account. All those other accounts, draw, revenue, and expense, will all be set to 0, and their balances that had been in there will be transferred into the income summary account, and the income summary account will be transferred into the capital account. So basically, the assets, liabilities, and equity account are considered to be permanent accounts. And I think that was probably in your very first couple lectures or couple slides in your very first chapter in Accounting 101. Assets, liabilities, and equity are permanent accounts. Their balances continue to build or decrease, but they are cumulative over time. However, the drawing account, revenue accounts, and expense accounts are considered nominal or temporary because they only keep balances in them for the time period or for the year that those transactions are for, and then they get closed out and moved permanently into the capital account to be set back to 0 again to start the new year. So that's what we're trying to do here. So here are the 4 steps in the closing process. Transfer the balance of the revenue account balances. So if you have 3 or 4 revenue accounts, you have to close out the balances of each one or transfer those balances for each of those accounts into the income summary account. That once you post that will clear out and 0 the revenue accounts. Second is to transfer the expense account balances to the income summary account. Well, okay, let's think about this. If revenues have a credit balance, and you debit the revenue account and credit income summary, so revenues will be represented as a credit to income summary. And now we're going to do the same thing with expenses. Expenses have a debit balance. To 0 them out, they're going to be a credit to expense and a debit to income summary. Then income summary debits will represent the expense accounts. So at that point, the balance in the income summary account should equal your net income on your income statement. Is that true? Yes? No one's talking to me now.
Yes.
Okay, Walter says yes. Okay, so now we have the net income as a balance in our income summary account. Income summary. That's why the name of the account is called income summary. So let's continue. Now we have to transfer the balance of the income summary account, which is net income, to the owner's capital account. And then the fourth one is to transfer the balance of the drawing account directly to the owner's capital account. So let's see how this looks. Step one, I guess the slide's gone, but step two is the example for closing the expenses. The income statement section of the worksheet for Wells Consulting Services lists 5 expense accounts. And since the expense accounts have debit balances, we have to enter a credit into each of those accounts to reduce each of those expense accounts to 0. And then the closing entry transfers the total expenses to the income summary account. Step 3 is to close the net income into capital, and the journal entry to transfer the net income to the owner's equity is debit to income summary and a credit to Carolyn Wells Capital. And then the balance of income summary is reduced to 0. The owner's capital is increased by the amount of net income. So at this stage, income summary is 0, every revenue account is 0, and every expense account is 0, and all those transactions are now directly in the capital account. So the net income amount, $33,667, is transferred to the owner's capital account. Carolyn Wells is increased by $33,667. This file got messed up. Sorry. And then close the drawing account, the drawing to the capital account. Withdrawals appear in the statement of owner's equity as a deduction from capital, and the drawing account is closed directly to the capital account. So the drawing account balance is reduced to 0, and the balance of the drawing account, $5,000, is transferred to the owner's capital account. Here's how the closing entries look. 1, we're going to close the revenue account. In this case, this is the same company we've been working with all from Accounting 101 to now. So fees income on the trial balance or in the ledger has a credit balance of $47,000. We are debiting fees income $47,000, and when we actually post that to the ledger will have a 0 balance. So we're going to debit fees income $47,000 and put that credit to income summary, $47,000. So now the balance in income summary is only total revenue. Number 2, we're going to close the expense accounts. And we're going to close each expense account. So salaries expense, we paid $8,000 over the year for salaries. And salaries expense account has a debit of $8,000 in it now. We're going to credit that balance, that account, by $8,000. Utilities expense has a debit of $650. We're going to credit $650 to 0 that balance. We're going to do the same thing for supplies and rent and equipment. We're going to do that for any account that has the word expense at the end of its title. If we have other expenses like interest expense, tax expense, any of those other expenses, we're going to include in this closing entry for expenses. Not just these 5 particular titles, but every expense account that your ledger has. We're going to credit each of those balances separately, and the total of those credits, we're going to debit the income summary account. So this income summary account of $13,333 debit, that should equal total expenses on your income statement. So now, with a credit of $47,000 and a debit of $13,333, the income summary account should equal your net income on your income statement. Now, the third step is to close out the income summary account, because at the beginning of today, we said the income summary account is a temporary owner's equity account. So right now, it has a balance in it of $33,667, which is $47,000 credit with a debit of $13,333. That nets out to $33,667 of a credit balance. So we're going to have to zero that out. So we're going to debit income summary, $33,667, and transfer that balance directly into Carolyn Wells' capital account. So do you see that the income summary is like a just a convenience to bring things together and then clear them out in a very clean and neat way? This way, the capital account only gets impacted by net income and not a transaction hitting it for each and every expense and revenue account. It's a nice, neat way of summarizing and keeping the capital account kind of clean and not have a lot of data in it. We put summary data in it, but not extreme detailed data, because it is the owner's capital account. They think about things like, how much money did I put into the business so the capital account would be increased? Then they think about, oh, how much did I take out of the business? That would be their drawing account. And they think about, how much money did I make? What was my net income or my net loss? And then the fourth entry does not use the income summary account at all. It clears out the drawing account. The money that Carolyn Wells actually took out of the business was $5,000. The drawing account, $5,000. So we have to, that's a debit account. So we're going to have to credit the account by $5,000 and debit the capital account directly by $5,000. And that would reduce the capital account. And that makes sense because she took money out of her capital account when she took that draw. So we still have Walter and Sarah here. So are there any questions at this point from either one of you?
Nope, you made it very clear for me.
Okay, thank you. Speak up if I ever get muddy, because sometimes this can get kind of muddy. Okay, so this is journalizing the 4 entries. And this is the same type of journal entries that we made in Accounting 101. It goes in the general journal. Now, let's post those closing entries to the ledger. Closing is entered into the description column of the ledger accounts. The ending balances of the drawing, revenue, and expense accounts after posting to the ledger will be 0. If they're not, you made a mistake. And then let's say using it, well, that's okay. We'll cover that when we actually look at the homework for this week. Closing entries and the post-closing trial balance using the information. Well, first we have to prepare a post-closing trial balance, interpret the financial statements, and review the steps in the accounting cycle. So what's the purpose? What is a post-closing trial balance? Well, it's a report that's the same format as remember we did a trial balance in 101, and then we did an adjusting trial balance? Well, this is a post-closing trial balance. The trial balance of the accounts in the ledger, what are their balances after we close the accounts out? So it's a report that is prepared to prove the equality of total debits and credits after the closing process is completed. It verifies that revenue, expense, and drawing accounts have zero balances. And it looks like this. For Carolyn Wells Capital Account, post-closing trial balance, you only see cash, you only see assets with balances in them, and you see accumulated depreciation, which is a contra asset, and you see accounts payable, a liability, and one account for capital. Before these 4 entries were posted, this trial balance also included Carolyn Wells drawing and all the revenue accounts and expense accounts, and they had balances in them. As you see, those balances are zero now, and they're all inside of Carolyn Wells Capital. Because at this point, Carolyn Wells, before the post-closing trial balance, Carolyn had invested in the business $100,000. And she had net income of $33,667, and she took out $5,000 as a draw. So the $33,667 is in the capital account now, and the $5,000 draw reduces the capital account. So that's how the 100 became 128,667. And perfectly, all your debits equals all your credits. That never changes in accounting. So so now we can actually look at the income statement and balance sheet and actually ask some questions. So what is the cash balance? And how much do the customers owe us? Well, the cash balance would be on the balance sheet, and this is just a partial balance sheet, just the half that's the assets. And the cash is $111,350. Accounts receivable is $5,000. So that was the balance in cash, and that's the balance in how much our customers owe us. That would be important in the next chapter because we're going to be dealing with accounts receivable and collecting cash from our customers and all the issues surrounding accounts receivable. So that's a preview of coming attractions. And likewise, another preview of coming attractions is how much does the business owe its suppliers? How much do we owe money to other people, to other companies? Because we bought office supplies and we bought computer equipment and we have an account at Costco or Walmart or any other big box store. So those are our accounts payable. So we owe $3,500 to other companies, but this is kind of a good company because we owe $3,500, which probably is due within 30 days, but our customers owe us $5,000, which is also due within 30 days and hopefully sooner. So we'll be okay with our cash flow. So that's kind of how we're going to end up being able to look at financial information and do evaluations on, is it good, is it bad, are they going to be in trouble? Because it all builds from Accounting 101 up. And here's their income statement. They had $47,000 in income, and their expenses were these are the same expenses that we closed out to the capital account, and the same revenue that we closed out to the capital account. This became the credit to the capital account, and this became the debit to the credit to the income summary account and credit to the income summary account. And the total net of $33,667, which was the net of all of these numbers, this $33,667 went directly to the capital account from the income summary account. And what is our profit? How much money? What is our bottom line? Our bottom line, our profit is $33,667. And the marching purple boxes. Okay, so again, the flow of data through a simple accounting system. Source documents are analyzed. Oops. Then you journalize into the general journal. Then you post to the general ledger. Then you do the worksheet, and then you do the financial statements. So if there's no questions to this point, I'll let the folks on actually speak up. I will go to, good. I thought I logged myself out of the classroom. So we're going to go to week 1, and I'm doing this live, so there's no smoke and mirrors here. And week 1, come on, week 1. Participate. Okay. It would be the week 1 assignment, which is worth 120 points. And it says, and I know you can read it, but I'm going to read it too, just because I'm that way. The last step of the accounting cycle is to perform the closing entries. You'll need to close all the temporary accounts, which are revenue, expense, income summary, and drawing. Begin by journalizing these closing entries and be sure to post to the general ledger. And then that's all the information they give you at in this window. So let's go to week 1. Okay. And I'm clicking on week 1, the actual template itself. Okay, Excel, load. Here we go. I just had to say that, right? I'm sure you folks never think that same thing. Okay, so here you're faced with an empty general journal, right? So where do I get the information? Page down. You have the general ledger accounts. And there's the capital account. Here's the drawing account. Here's the income summary account, followed by your fees income, rent expense, utilities expense, salaries expense, and depreciation expense. Oh, let's not forget the supplies expense. Then we have balances in these accounts. Here's 800. Here's 450, 2300. So there's balances in these general ledger accounts. So just like Accounting 101, every yellow space, we expect something in there. So what is the first closing entry that we do? Do you remember? Just go ahead and speak up. Looks like Sarah and Walter have gotten shy. So basically, remember the first entry is revenue. You close the revenue account. So let's go to the revenue account and see what it is. And it has a balance in it of $2,000. I'm sorry, revenue account has a balance in it of $15,300. And the name of the account is Fees Income. And it's going to be December 31st. Fees Income. How much was it? 13,500? 15,300. 15,300. And my credit is going to go to, and you indent the credit accounts, titles, income, summary, 15,300. And then you do the same. Remember the second journal entry was the expense accounts, closing them out. The third journal entry was to close out the income summary directly into capital. And then the fourth one was to close out the drawing account directly into capital. And then we're going to post this entry to the ledger. So it's fees income 15,000. So let's go to fees income. $31st. Remember in the lecture it said put closing entry into the description. Posting reference, and it will be in a second. 15,300. And then our ending balance would be 0. And it's okay, it's formatted on the spreadsheet that when you type in a 0, it's going to give you a dash. Don't think that's a minus sign, it's a dash indicating no balance. And then the posting reference at this stage would be the journal entry page number. So it would be J for journal entry, the general journal, and page 3. And we're looking for this data to be populated also. So posting reference, excuse me, would be J3, and the account number is 401. The account number for this one is 401. And we have to do the same thing with income summary. We're going to put the 31st, closing entry, J3, 15,300 credit. That gives you a 15,300 credit. And this account is 309. And we're going to complete this journal entry posting by putting in 309. And you have just posted the entry to the ledger. And when you do the other 3, which I won't do live, when you do the other 3, you'll end up having the capital account will be increased because of the income less the drawing account. The drawing account will be 0. The income summary account will be 0. Fees income, rent expense, all these other accounts will be 0. And that's your homework for week 1 in Accounting 102. So I'll ask once, I'll get the chat window up, and I'll ask once again, are there any questions at all about being successful in week 1?
No, I think you covered it all for me.
Excellent, Walter. I hope to see you next week.
Definitely.
Great. I was glad. You know, it's so much easier to do this when someone is actually on the other side. So thank you for attending.
Thank you for giving
Sarah?
us a lecture.
Thank you. Sarah?
I think I got it.
Excellent. Well, this has been recorded, so you can always re-listen to it. And you know that for different places of the lecture covered which subjects. So with that, enjoy your child. How old is she or he?
She's 4 and my son is 6.
Well, enjoy every day with them, and I'll see you next week, I hope.
Yes, ma'am.
Okay, take care and have a great day. Bye-bye.
Thank you. You too.